Interest rates have gone negative. For the first time, the Fed funds rate, is nearly zero. Can't do much more with that to stimulate the economy. So what does the Fed have to do? Print money. We're a debtor nation, and we're relying on foreigners for support. Largest creditors are China, Japan, and the UK. Look what Japan did, beginning in around 2005. And that raises the question, I wonder what they knew. Okay? Who picked up Japan's slack? China and the UK, primarily. So where are we going from here on in? You can't ignore the fact that trust factors and the lack of accountability is an issue here. What if the rest of the world starts to believe what we believe? I mean, media now is worldwide. Media is now instantaneous. The world knows this. What if they start saying to us, yeah, we agree? Or what if they can't? What if they can't help us? China faces an enormous loss of exports right now. China's not going to be able to afford to help us to the extent that we need it. They face massive unemployment, a slowing in GDP, and they need to stimulate their own economy. So all that's a backdrop for then us to ask the question, what's the forecast? What's the likelihood? Euphemistically, we're calling this the Great Reckoning, that we anticipate lasting about 5 years, until 2013. Here's the scenario. Bank losses going to exceed $3 trillion. We're going to have more TARPs, 2, 3, and 4. TARP 2 is already built into Obama's new budget to the tune of $750 billion. The Federal Reserve is going to have to print more money. It'll be printing more money in steps. Enormous increase in monetization. Additional things, additional problems. Government capitalization of banks. Investors are going to be diluted tremendously. What happened today? The government took a 36% stake in Citigroup today. What's the first thing that the government suggested? They said, overhaul your board of directors. They also said preferred shareholders are going to have to swap for common stock. Foreign investors are worrying about Washington. The dollar is clearly at risk. And the Fed cannot raise interest rates in this kind of an environment to attract foreign capital. So the inflationary pressure cooker for the long run is in place. But we don't have to worry about that for a while because we're still bailing the boat. Tax revenues are going to shrink. Painful budget cuts will be taking place. And the American consumer is now going to become a saver. They're going to be starting all over again in terms of learned behavior patterns, learning from Nana and Grandpa. Here's the contribution to GDP of the various sectors. C plus I plus G plus net exports. Consumption is the big one, 70%. Here's the savings rate. Where's it going to go? Let's do the arithmetic. Let's go back to 10%. If we go back to 10%, what do? Shrink the economy. What do we take out of the economy? About $1 trillion. What does that translate into? Retail sales falling way off. Takes a lot of time for stimulus to happen. So therefore, the inflation rate is going to be weak. CPI. It's going to stay negative for the next few years. We're in a deflationary period for a long period of time. So on a global basis, what do we got to do? We've got to rebuild our trust. We've got to rebuild trust worldwide in us. One thing that has not happened in the last month, or a month or two, in any of the discussions in Washington is regulation. No stop has been put on the behavior patterns that led to this. Credit default swaps are still occurring. You can still trade them. They haven't been stopped yet. They will be. The financial system is going to go through a huge transformation. You're going to see a lot more regulation in the next few years. Discussions about protectionism have surfaced again. I find that interesting because of the fact that we're so interrelated that the whole issue of protectionism is really a non-issue. Because parts that are made here and shipped to abroad for assembly or parts made there, shipped here, whatever. We're just too interrelated such that the protectionism is really not going to be a serious intellectual debate. China severely reduced exports to the U.S. recently. Factories have shut down, millions are unemployed, lots of unrest right now. So as a result, the outlook for China, in terms of their growth, is very, very low. It may pick up from some other worldwide demand beginning sometime next year. What does that mean? This is a scary chart. This means that no one can afford to support our debt. Japan can't, the UK can't, and China just flattens out over the next several years. So who's going to support it? Us. More printing. Let's talk about the social implications. New retirement contract with the workforce. Face it, the 401k experiment has failed. It's been too risky. The government is also, will lose future tax revenue because of it. Public pension obligations are going to go unmet. We're unable to raise taxes to fix it. So we're going to have to go through a complete overhaul, which means a new paradigm for retirement. We may not have a choice. We may not be retiring. Part of the reason? Look at the enormous increase in social services that we're going to need. Healthcare is going to be inundated by the silver tsunami wave. Why? Because we're getting old. There's a huge, huge discrepancy in the healthcare arena right now in terms of how we spend our money for certain types of factors. 4 cents of every dollar spent in healthcare is for prevention. 96% is for treatment, and yet 70% of our behaviors can be changed and influenced by preventive measures. But all we do in this country is focus on the treatment aspect. But the risk is very high that Barack Obama will be a single-term president, even at his own admission. If you saw the interview just prior to the Super Bowl, he made that comment. The risks are high because these problems are going to be his problems. And eventually, the public will hold him accountable. It doesn't matter what the origin is. What we're setting ourselves up for with all these realities, both behavioral, technologically, and economic, are for a series of one-term presidents in the United States who can't solve these problems because it's going to take a while for all this to unwind. The lack of accountability, by the way, continues even today. Ken Lewis, CEO of Bank of America, what did he do with John Thain not too long ago? Fired him. For what? Paying out early bonuses. It hasn't stopped. What can you do personally? It's all part of the story. All this is reality.